Yes, exactly. That's the whole plan.
Yeah.
Well, at least like ease into controversy. Like you need a little bit of a fan base before you're just going to start saying wild stuff.
Yeah, I got one about your what's one thing I would change. I got one that's probably going to create some controversy.
Ooh, okay. Perfect. All right, well, I guess I'll do an intro. So I'm Hunter Latown. I'm an associate broker and realtor in New Hampshire, Maine, and Massachusetts. And I've brought Ben to be my first guest of my podcast. You want to introduce yourself, Ben?
I will. This is Ben Delorge. I am a mortgage loan officer with Fairway Independent Mortgage. This is second time I've been on a podcast. I appreciate you having me here. It's crazy in the real estate market, so hopefully we can bring some news and some light to folks out there who have questions.
I like it. I think you should actually run the podcast because you've got me beat
Negative.
double on,
Not
on
happening.
doing podcasts before.
No, just fire your questions away that I've been panic reading in advance, as you
Yes.
put it, and we'll take it from there. Yeah.
But the rest are secret.
Okay. So, hot take. The 30-year mortgage is overrated. I disagree with that because I believe that each mortgage application is to be built around the client themselves. Is a 30-year mortgage kind of like a default mortgage? Of course, right? Everybody needs to understand where their baseline is, and then you can build different models from there. Especially first-time home buyers, they don't know,
Yeah.
and you can explain the benefits of the 30-year fixed rate, easy underwriting process, lenient guidelines, things like that. But I think ultimately it's not overrated. It's really about the client.
I would agree with that take. And I would say, if anything, I think the question of is it overrated just comes from people not knowing what their options are.
Right.
Like, I feel like most people, if they don't know anything about the industry, they're like, oh, that's what you do. You get a mortgage and it's for 30 years and you have it
Right.
until you die, basically.
Yeah, and sometimes folks qualify for multiple different
Yep.
programs, so it's good to put it all on the table. And some of those programs will work for property specific or specific properties. You just got to work. You
Yeah.
work with the real estate agent. I call the three parties the Bermuda Triangle.
Oh,
Yeah, that's
nice. Okay.
that's what I call. So obviously, I don't need to get into detail about that.
Well, no, is that what, loan officer,
Client.
client, realtor?
Yes, that's what I tell my clients.
I like it.
Yeah, that's
How
what
do
I say.
do people like that analogy?
It helps them laugh.
Okay, fair
Yeah,
enough.
That's
fair enough.
right. We want to keep them calm.
I've got like my arsenal of jokes that just like on repeat, like shoot off, first appointment
Oh,
or first
yeah.
showing or whatever. Like
Totally.
they're tried and tested. They're going to get a laugh. What is your most embarrassing moment with a client?
Oh. So I made a mistake early on in my career. As you know, New Hampshire has a variety of different taxes in different counties and towns.
Mm-hmm.
And when we're writing a mortgage, we're trying to build an estimate up front of what is due for property taxes in advance. Try
Yeah.
to be conservative,
Yeah.
over quote, and then hopefully it comes back lighter.
Yeah, and they vary wildly, especially in New Hampshire,
Yeah,
between
oh,
towns.
yeah.
It's like night and day.
Yeah. So early on in my career, I wrote a mortgage for a client, and I had to call her back about 72 hours before we were closed and ask her for another $5,600 in property taxes. And not only embarrassing, but just earth-shattering for the client to say, "Hey, I need another $5,600 because property taxes was
Yeah.
due." So that was a hard lesson.
It worked out, though. I mean, at the end of the day.
Yeah.
Yeah.
Yeah, it worked out, but it still makes you wonder. It makes me wonder to this day: will they come back?
Yeah,
Something
very
that
true.
large, a couple $100, $1,000, it's manageable, but that was a lot of money.
Yeah.
That was the most embarrassing moment.
That is hard.
How about you?
Mine's not as dark, I guess.
Fair enough.
I would say, and it was also early in my career, it was a home inspection. So I was representing the buyer. So we were, and typically in a home inspection, when you come the day of, the sellers should not be there. Usually you're getting there, right, and you're meeting the seller's agent and the home inspector. And this was one of my like first ever home inspections. So that's what I'd been told to expect. So I get there, I meet the client in the driveway. It's early in the morning. We're like, great, good to go. I see the home inspector's van in the driveway. I don't see the list agent's car, but then I think maybe I didn't know exactly what her car looked like. So we go up to the front door and I'm like, all right, home inspector's already inside. I bet the list agent's with him. Let's just go in, quick knock, open the door, and we just barge into the house. The seller and his wife are sitting at the kitchen table in their pajamas, eating breakfast. And we barge into the house and they're like right there and they're like, who are you? Like he stands up from eating like his pancakes in his like robe because it's like 8:30 in the morning.
Yeah.
And yeah, and I stuttered my way through explaining who I was. They're like, oh, the home inspector's, in the basement or whatever. And then the guy had to show us down to the basement, like tying his robe around himself or whatever. And it was mortifying.
Borderline creepy.
Yeah, borderline weird because I'm like, the home inspector was here. So
why are you in a robe?
Why are you still
if you know
in
there's
your
an
robe?
appointment, right?
But then,
Wow.
my clients looking to me like, did we just like break into this, do we just barge into this house while they're eating breakfast? Yeah, that one keeps me up at night still.
Yeah.
But it turned into one of my jokes, right? Where
Yeah.
now when I show a property to someone, every time we walk in, I'm like, hey, hello, anybody home? And then I get to turn to them and be like, I've walked in on people before and it never leaves you. So now every time I have to make sure.
Yep. And home inspections can be stressful.
Yeah.
So maybe it will, bring them down a couple notches.
Exactly. At the end of the day, that all worked out.
Yeah.
I'm still close with that client, but it was a good lesson.
Yeah, I agree.
And I figure too, we have to learn these things, especially in this industry, because it just stops you from making a worse mistake later.
Yeah.
Right? Like with the property taxes, you'll never make that mistake again.
No.
So it's never going to be, some other mistake. Now it was 10,000 instead of 5,000 or something, right?
You got it.
And I am never going to not announce myself, or,
No.
or give someone a chance to answer the door.
Yeah. No.
If you could create a new law about real estate or mortgages, what would it be?
A new law. This is one of the ones that I had said I brought in advance.
Okay.
So
So it better be really good and really well thought out.
I think it's all right. So my thing with the mortgage process is I would revamp the appraisal process. Mm-hmm. It's stressful. Mm-hmm. More and more people are hearing about appraisal waivers. How do you cover an appraisal gap when you're writing up an offer? Mm-hmm. And the market is starting to shift into this, but if it's streamlined across the entire investor platform, mm-hmm. so Fannie Mae, Freddie Mac, FHA, VA, whatever it is, if they streamline that process and made it all digital, so it's a click of a button, the property evaluation comes back, it's equal to the sales price mm-hmm. of the property right out of the gate. It gives you the opportunity to work through it instead of those last minute appraisal details. I'm not sure it's something that's going to happen. It started a little bit, but that is definitely one thing I would like to change is that appraisal process. It's tough when everything's digital.
Yeah.
But you may only need to bring a human touch in on some cases.
Yeah.
Underwriters, when they get the appraisal, they look at the appraisal report and then look at the property itself. And I actually had a scenario where I was selling some folks, or I was writing a mortgage for some folks in Nottingham, and they bought a house, and the appraiser wrote back, all good. Mm-hmm. As is, no repairs needed. The underwriter went in and looked at the property and came back and said, no way.
Yeah.
This property is not as is. There's no way we're going to be able to accept this. So the underwriters are that human touch, mm-hmm. And they have the power to push reports back. So if we make it digital, we make it streamlined, somebody is still touching it and putting their hands on it. Mm-hmm. Are they appraisers? No, but they know enough about properties and themselves to be able to say that roof looks like it might have a water leak. We need somebody to go out.
Yeah.
But that's my thoughts.
No, I like that.
Yeah.
Well, and that's such I feel like in a lot of ways the industry is still trapped like a couple decades ago. It's 2024. Like that should be a very reasonable solution,
Yep.
especially for like an appraisal. That's such a huge pain point for people for the Bermuda Triangle, right? Everyone suffers over the appraisal, and it's because it happens so late in the game, like you said, where you're like, oh, everything's great, and then it comes to value even, and then it's like, oh no, actually,
Yep.
do all these things, or never mind, you're not getting the house.
Yep, absolutely. And offers are getting won with appraisal gaps.
Yep.
How much you're willing to cover.
Yep.
Well, this is what, as a real estate agent, this is what I suggest.
Yep.
Or you get an appraisal waiver. Appraisal waivers are phenomenal, but from a client perspective, do I really want to buy this home and not see if it's worth more, right? Am I going to have equity going into it? But they're taking the risk of finding out that it comes back undervalued.
Yeah.
And now everybody is renegotiating.
Yeah.
I'm trying to modify the loan, or the real estate agent is trying to negotiate with the other real estate agent. It can make for a lot of unwanted, maybe unneeded conversation.
Yeah.
So digital would be great.
I mean, how many times just the two of us it's been like 9 p.m. on a Saturday, and I'm like, hey, like, you need to get on a call with me so we can explain the appraisal issue to this client.
Yep.
That multiple times.
Yes.
If you were not doing this job, what would you be doing? Say something really cool.
Yeah. So I went to college to be an auto mechanic. You are sponsored by a company. I was sponsored by Ford.
Okay.
And I went to a trade school, came out, and decided that I was going to do this. I was a mechanic for a while.
Okay.
Then I decided I didn't want to do it anymore because I'm watching these older guys work next to me, and they're like walking crooked, and they're all beat up, and they're tired. And I was like, I don't want to be like that. I was 21 or 22 at the time. So I decided that I would move up into the realm of customer service, move up to the desk. I ran a foreman position where I was responsible for the work going out. And I really did enjoy working in the automobile world. I did it for 19 or 20 years.
Okay.
And it was a lot of fun. So I would totally dive back into that if I could, but cars are way more advanced. It would take me so long to figure out what was going on. But it was a lot of fun.
The first time like a Cybertruck rolls up into the shop.
I've seen two recently, and I look at them and I'm just like, what do you do with that?
Yeah, I kind of love them. I get excited when I see them because they're just so crazy.
Yeah.
What is one thing people get totally wrong about your job?
That is a great question. One thing that people totally get wrong about our job is, I don't know, maybe it's from prior experience or from lack of knowledge, but we're just salespeople.
Yeah. Yeah.
Right? That's all we are. We're selling a product, or they don't understand how we get paid.
Yep.
And we're not just sales. Well, I'm not. I'm not just a salesperson.
Yeah.
My goal.
I'm not either.
Yeah. My goal is to get to know people and learn about them, which helps me learn about what they should be doing going forward on their financial future. And you kind of pick up on that early on, which then can create the jokes to come out even more to try to break down that wall.
Yeah.
But I think that's where it is. We're just salespeople. We're there for the dollar. And that's not true.
Yeah.
In a lot of cases.
No, I totally agree. I think a lot of that though does come from, I think both as, for realtors in the real estate industry and then for loan officers. And maybe it's a controversial take, but I think there's a lot of people with our jobs that should not have our jobs. There's a lot of people who are just in it for the check, who, don't take their education seriously, don't actually care about helping clients. And I think that's made such a terrible, general view on what we do. And I think that's kind of where it comes from. Like, oh, you're basically used car salesmen,
Yeah, right.
So I would think that's simultaneously what people do have right, because that is a good chunk of the industry, but also very wrong.
Yeah. Yep, I agree. And if you can project yourself as not just a salesman, the referrals will go out from people that say,
absolutely,
I connected with that person so well.
Yep.
They really understood me. and your clientele will come to you in advance knowing that you're not just a salesperson, you're actually a human.
Yeah.
And you're going to put their best interest forward.
Absolutely. And that's how you know you've done right by a client too, when 6 months later they're like, hey, my best friend needs to buy a house now, can you help
Right.
them, right? And that's when I'm like, okay, I know that I already thought I did, but now I know that I did right by them because they're now willing to send me their loved ones.
Yes.
Yep. So, and that's just the best feeling ever. I love that.
I love writing mortgages for agents' family members.
Yes.
That means they trust you. Or for an
Yes.
agent themselves.
Yep.
It means they trust you. And whenever that happens, it's definitely a little beat on your chest kind of moment,
Yeah. No, I totally get it. When I first got started, and when I was 22 when I started, and it was very hard to get people to work with me who I knew, or to, get people I know to refer people to me at first. And I totally got it, right? I was 22, fresh out of college. Like, what did I know? What business did I have helping anyone to buy a house at that point? And it didn't take long for people to change their minds on that, because, I was very committed, obviously, and still am. And I think people realize that. But once that started happening, where my boyfriend's dad was one of the first people, he was like, hey, I have this work friend who I'm really close with. They need a new agent. And I gave him your number. And I was like, that just felt so good.
Yeah.
And then it just takes off from there. And it's the same thing of like, you just have to build that trust.
I agree. Your first year was actually phenomenal, if I remember correctly.
It was quite good.
Yeah, I remember. It was actually stellar, right?
Thank
It
you.
was
Yes.
up there.
It was a lot. The burnout was very real, like at the end of that year, because things calm down in like December, January, right? That's a normal every year. That's when it really slows down, and a lot of people will kind of take a break. That's when you go on vacation. Those months for me after that year were like, I didn't really get off the couch. I didn't really do anything, because the burnout was, and the stress of it too.
Right.
That was still, I've had other years where I didn't sell as much as I did on my very first year in the business. And that's the year too, where you're like, I don't really know what I'm doing. Everything that I do, I have to follow up with multiple calls to my broker, to people like you, to other agents, to be like, hey, help me make sure I'm doing absolutely everything right.
Yeah.
And the stress of that was,
Yeah.
that's what I tell people too when someone comes to me and they're like, hey, I'm looking to get into the industry. I think I'd do good as a realtor. And I'm like, you just need to understand that the first year or two is brutal. It's terrible. You get through that and it's great, but it sucks.
Until you build that foundation of your knowledge, your
Yeah.
expertise,
Yeah.
and you're able to just take it to the next level, which is really understanding what you got to do to get where you want.
Exactly.
And that's what takes time.
Exactly.
My first year in the business was during the refi boom. It was when every rate
Yep.
was 3% or lower.
Yeah. Because I think we kind of got into it around the same time.
Right.
Yeah.
Yeah. And I did great.
Yeah.
I had a great year. The next year, it was absolutely terrible. Terrible.
Yeah.
And there's been many times I just sit there and I was like, what's happening right now?
Yeah.
Like, what are we doing?
Yeah.
What am I doing? And then it's gotten consistently better, but I had to learn the foundation. Mm-hmm. So, the first year when you have interest rates that are 2.5%, 2.3%, 2.9%, everybody's just coming and saying, just refinance my mortgage.
Yeah.
Right. It's an easy process. You run it through and, it takes off. And then once after that, it was.
How do you get paid? Like, do you make less on a refinance? Is it the same versus like a new loan?
So it's dependent on the product.
Okay.
So your regular investors, like we said earlier, conventional, FHA, VA, USDA, most that stuff is a flat, equal pay across the four of those. Mm-hmm. But when you start branching out to unqualified or non-qualified mortgages, which is bank statement loans,
mm-hmm.
debt service coverage ratio loans.
Real exciting.
Yeah, which rely on market rent for
Yep.
income. No other, no pay stubs or anything like that. So when you get out and you're starting to get into the broker world, depending on your relationship with your company that you work for, you can be paid differently. They modify it. So it's different.
Yeah.
It's different depending on the avenue that you take.
Okay. I'm going to go off script, off little torn up pieces of paper for my next question. How do you think that you would do if we like switch jobs? Like if you were a realtor?
So let's talk about how long I've been in the real estate industry. Mm-hmm. All right. So I've been in for 13 or 14 years. I've been affiliated with the real estate industry.
Okay.
I actually went to take my real estate license, but I was falling asleep in class. And I just decided that this wasn't for me.
Yeah.
But, you know, my wife is a realtor.
Yes.
So I hear
She's a killer, kick-ass realtor.
She is. I live it. Mm-hmm. I live it. But I don't think I would be great at it.
Okay.
Just because there's a lot of variables that go along with buying a house and selling a house. Mm-hmm. And I don't think I have the creativity in my brain. I'm functional. I'm process driven.
Yeah.
You know, I love to have things that I can read in front of me that help me do my job more efficient. Mm-hmm. And I feel like real estate is just off the script.
Yeah.
You know, you guys don't have a script. You have to build a relationship. Every property is different.
Yeah.
It's just, I don't think I could, I don't think I could do it that easy. I can't flow like that.
Yeah.
Yeah.
No, that makes sense.
So I tell clients when I meet with them, I said, hey, I work realtor hours. So if they call me at 9:00 on a Sunday night and they need me, I'm there.
Realtor hours is basically just suffering all
right.
the time.
Yeah. You could go 8 hours on a Wednesday and not do anything.
Yeah.
And then from 6 to 12, you're working.
Exactly.
You're making up for it.
Exactly.
And, one of our biggest battles is other mortgage regulators is what they're called in banks. They work 8 to 5.
Yeah.
And they're gone for the weekends.
Yeah.
And I think if they could streamline that and either make it so everybody works all the time, or we all work an 8 to 5 job. I mean,
Yeah.
I have the ability to say no on the weekends, but why would I? Right? Clients need somebody who's available.
Yeah, exactly. Well, it's just you're hurting your own business.
Yeah.
Right. And I mean, I don't work with loan officers who aren't available when we need them. Right. I don't mean that as a threat. But,
Yeah.
but that's like the whole point of, you're going to bring someone onto the team and you're creating like a stellar team.
Yeah.
It's part of the job.
Yeah. I mean, not to like toot my own horn or anything, but
No, toot it. It's okay.
I worked 4 hours on Christmas Day last year.
Oh yeah.
And they got their offer accepted.
Yeah. And awesome. That's it's part of the job,
But so was the agent.
Yeah.
The agent was working.
Yeah, very true.
So both sides of the equation. But that's what we're here for.
My very first year, I had a buyer consult appointment scheduled for Christmas Eve. And this was like some random online lead, never met her before. Just talked to her on the phone and, scheduled a meeting for her to come into the office Christmas Eve. And this was like, I got my license in August or September of that year. So I'd barely been in it at all. She doesn't show up to the meeting. She had like misunderstood me and thought we were going to be meeting at the house. So I call her because I'm like, I'm here, where are you? And she starts screaming at me over the phone. She's, you're so terrible at your job. I'm going to report you to your broker. I'm going to write a bad review about you online, when this was just totally like a misunderstanding. And then the next thing I know, it's like Christmas Eve and I'm crying in the office.
Why am I doing
and I'm like, why am
job?
I doing this?
Yeah.
Why do I hate myself when I could be at home?
Yeah. I mean, it's a mistake, right? I had a client show up to our office in Exeter, and the agent called and was like, hey, your client's here, and I'm sitting on my couch. And I'm like, oh, I'm almost there.
Yeah.
Because I live 11 minutes away from the office.
Like, oh, the traffic's bad today.
So I'm like running around the house, and my wife's like, Kate's like, what are you doing? I'm like, I have somebody sitting at the office right now that I forgot about.
Oh, so you did forget about them.
Oh,
right?
yeah, totally. Yeah, totally. 100%. I completely just biffed it. But I made it there. Everything was fine. But still, we have those moments.
Yeah, we're humans, right? Like that's, you can only, I think what's your craziest close call on getting a deal closed?
The most recent one. Actually, no, not the most recent one. The one that I had in August. I had a gentleman, he's a repeat client, buying a house with his wife. Mm-hmm. He used to work in the UK under the Queen.
Okay.
She passed away. He moved to the States. Okay.
Specifically because?
I don't
Oh,
know.
I guess-
I don't know
okay.
the 100% reason
Okay.
behind that, but I
Interesting.
know that he left right after.
Okay.
And he came here. When I first wrote his mortgage, it was non-traditional credit. It was good, but we got it done.
Yeah.
So the next time he comes, he says he wants to sell his house. He wants to buy another one. I said, okay, great. So he sells. We're in the process. We are 48 hours from closing, and the title company reaches out and says, his wife, who works for the king, still a citizen in the UK,
Okay.
it doesn't have a social security number. So there's a holdback on money
Huh.
for taxes because of that. And it was like $30,000.
Yeah.
And they just didn't have it.
Huh.
So I spent 13 hours of the day, morning and night, or over 2 days, 13 hours on the phone with the accountant, the lawyer, the title company, the selling agent, the buying agent.
God.
And it was 4:45 the night before we were supposed to close. I got the owner of the title company to say, I'll back the funds up, but he has 20 days to pay us back.
Wow.
And otherwise we wouldn't have closed.
Yeah.
I mean, there was 3 different parties in the transaction who would have all been affected. I had the listing agent telling me, yeah, all of our stuff's in a pod. Like, we're
God.
going to show up to the closing tomorrow.
Yeah.
And I'm like, yeah, you might not want
Yeah.
to do that.
Yeah.
So that was probably one of the craziest ones I've had.
I mean, talk about like going all out though and finding a solution. Like that's all.
I was stress eating.
I would I would think at that point too, you'd be like, can she just have my social security number? Like,
Yeah.
I'll just give her mine. It's fine.
Yeah, I'm like Pop-Tarts,
Yeah.
Doritos, soda, walking around the yard. I need silence. I need to be on the phone.
Yeah, I do that. I pace when I'm having, even if it's not that stressful of a phone call. I'm like just pace around in circles. That's
Yeah.
like my go-to. Got to go outside, walk around.
Yeah, our processing team calls me a drama queen because if I don't get the answer from the first person, I'm calling the next person.
Yeah.
And then I'm calling. I will call 10 people to get the answer that I want, and they all know that about me. So
Yeah.
they call me a drama queen.
I like it.
I'm nice, but that's that's the nickname I've received. But I get stuff done.
Yeah, I mean that's all that matters, right?
Yeah.
What do you think the real estate market's going to do in the next 6 months to a year?
I actually have something written out about this.
Well, interest rates are going down.
They're going up.
Or they're going up. They just
Yes.
did a huge relative cut,
Yeah.
right?
They're going up
Okay.
right now. And so this is why they're going up. We have from roughly April of this year, rates have been lowering steady. And what that is that's the bond or yield market investors lowering rates in anticipation of last Wednesday's rate cut.
Gotcha.
So it's not so much that the rate cut is just going to be like, boom,
Yeah.
we're down a 0.5 percentage point. It's we've all built it up to this point, and now we got what we wanted, so the market gets shook up, and things are a little volatile. That's always a word that we hear, volatile. But it becomes a very up and down situation, and things will settle. But right now, I'm waking up and I'm looking and I'm reading and I'm seeing that interest rate or bonds were selling good yesterday afternoon, and we gained some traction and interest rates might start lower in the day, and then an hour later I'm reading that no, it's actually getting worse. There's just so many factors that go into interest rates with all the different reports, and
Do you think they should be more or less regulated?
I think they should stay the way they are.
Stay the way they are.
Because people need to have a foundation. If they start changing all of these rules and stuff that they have, which are put in place to protect the client since 2008 happened
Yeah.
and everything went crazy and everybody was just giving mortgages to anyone.
Yeah.
I think the rules that they have in place are good. They're protective. They're responsible. They're smart. And we're just going to continue to have an up and down market.
Yeah.
I think refinances are good. We utilize some of the New Hampshire Housing Authority programs. They're solid. Any other state, authority programs for housing, Mass, Maine. I'm licensed in Mass, New Hampshire, and Maine. So I think in the future, we're just going to continue moving along.
Mm-hmm.
If the rates get a lot lower, you're going to have people selling more.
Yeah.
Which creates a bigger draw from buyers.
Yeah.
It could create more offers. It could create more competition. And we don't want that to happen too much.
Yeah. Well, and that's what I've been telling clients too, who, have been frustrated with how high the rates have been until relatively recently, right? But a big reason that the prices went out of control like they did was the rates were ultra low. It was that, and there wasn't a lot of inventory. And it just, your payment, your monthly payment's going to be less because it's a low rate. So now you can afford to offer, X amount more in a house. So that's what I'm kind of been trying to tell people is we have to correct this slowly, or we're just going to end up with the 2021 market all over again when it's, outrageous and prices have doubled. And then, good luck to anybody getting a home at that point.
Yeah. And I mean, think about first-time home buyers. They're just out of college or they're carrying a lot of student loan debt. Yeah. They probably can't buy a $600,000 home, which is our median average in the Seacoast, maybe a little bit more.
Yeah.
So not a lot of people can afford that.
Yeah.
And we need to just keep a level playing field. And that kind of can come back to where the digitalized appraisal process comes through. Because if it goes streamlined and let's say it happens across the board, your outrageous prices on these properties might start to get dialed back a little bit. Mm-hmm. Again, like I said, that might not make a lot of people happy. You have an appraiser listening to this podcast. They're not going to be happy that I'm suggesting putting them out of a job. And real estate agents may not be happy that I'm suggesting that we use an AI approach to property value.
I mean, AI is the future, right? That's what's happening. I can't even believe how quickly it came. It felt like, one day it was like, oh, did you hear about ChatGPT? Do you know what that is now? You know what that is? And now it's like, you can't even exist. Everybody knows, you know? And it's everywhere now. So that's the future, right? So I think it's kind of adapt or die, it's coming for all of us. So we need to find ways to work with it and to incorporate it into the business, or it's just going to eat us all alive.
Agree. 100%. Yeah.
Yeah.
It's getting there.
I know. It's a little spooky.
Yeah.
It's a lot spooky.
I mean, imagine when somebody waives an appraisal and then something changes during the refinance process and that triggers the underwriting system to come back and say, now this property needs an appraisal.
Yeah.
But you wrote that offer with a waiver.
Yeah.
It is really hard to prep the Bermuda Triangle for the what if situation in that case.
Yeah.
Because something's happened to the point where the demographics of the property now require an appraisal. Home could have closed, let's say, and it doesn't like the price anymore. We're constantly double checking underwriting throughout the process to make sure that the client is still approved and eligible for the mortgage.
Yeah.
And we do it numerous times. And that can create some discomfort.
Well, yeah. And I think even if this solution was, implemented, on a large scale, there's so many nuances to this industry that I don't see us ever really losing our jobs, to something like AI or to something like, you can go on Zillow now and get, Zillow will help you buy a home, whatever. And it's just some person in an office somewhere. I don't see people like us ever really getting phased out of the industry because it's just so much more complex than the average person realizes. Like everything you said that you have to do behind the scenes to get something to close at 4 a.m. Right. And when it comes to every property that I've ever listed or helped someone buy has been so different. There is always something that goes wrong. I've never ever once had something where nothing went wrong at all. And I just don't think that at any point in the near future that's going to be able to be replaced entirely.
No, I agree.
It's just, you got to adapt to the changes. A lot of people are going to get phased out of the industry and have to go into different things, right? Because I think, of course, with these technological changes, you get more efficiency in some ways, and you maybe don't need so many people to do one job. But if you're willing to adapt, then you're going to be okay at the end of the day.
If you want to survive, you have to adapt.
Yes,
right?
exactly. Yeah, exactly.
I mean, I have an app on my phone that I can copy and paste a text message, type it in, and write, please reply, relax with a happy text message, and all of a sudden it's like, boom.
Is that just like the Chat GPT app, or is that something specific?
I think it's called AI Chat.
Okay.
Yeah.
I use Chat GPT all the time if I have to send a client a text or something, be like, or just respond to this, and I'm like, God, when did I stop using my own brain to do this? But
and at the bottom it says, add your own personal touch.
Yeah.
You got to remember, if you're going to do that, you got to take that part out.
Yes, yeah, very true. I'll get like frustrated sometimes using ChatGPT. Like I'll be telling it. So I was trying to come up with names for this podcast. Still have not. I don't have anything. And I'm on ChatGPT and I'm like, give me a name that is fun and maybe incorporates my name, like that kind of thing. They would give me a list, and I'd be like, no, I don't like any of those. Try again. No, I don't like any of those. Try again. At the end of it, I'm like, you're not listening to me. ChatGPT, listen to what I want and give me something good, And then I'm like, why am I getting upset with the AI?
Because AI is going to have feelings at some point.
Yeah, truly.
And then you can hurt the feelings.
Yes. And then I'll be okay, right? And be like, once I can hurt its feelings.
I'm frustrated.
Then, yeah.
Yeah.
And now it just feigns that you've hurt its feelings, where it's like, oh, I'm sorry that you didn't like that answer. I'll be quiet now.
Yep. No, I get it. I get it.
All right. Well, I think we've covered all the little scraps of paper, except for the few that you didn't want to answer.
You know what? That's not fair. So I want to say one thing.
Okay.
All right. About, for buyers that are listening today. And this is, I wrote this in advance because I probably wouldn't be able to put it out off the cuff. But for buyers listening to this podcast, my recommendation is to not buy a house more than you're comfortable paying for.
That's a good one.
So, your comfortable payment, and that's where you want to be. And if you can't find a property with that payment, then we need to dial it back in and let the loan officer give you guidance on what you need to do to get there.
Yeah.
You don't want to buy a home with no money to pay your utilities. You don't want to buy a home that's actually going to stress you out when you move in because you have a larger mortgage payment than what you wanted to.
Yep.
And life happens.
Yeah.
Cars break down.
Houses break down.
People get sick, Yeah. It's just, there's a lot of unexpected there. And we qualify clients on gross income, not net pay. And that's something that has to be laid out to people so they understand, you make X amount of dollars a month, but there's a third of that that's going to somebody else. So can you afford this and all of your new expenses on top of it?
Yeah.
So I guess to kind of close, don't buy more house than you're comfortable paying for.
No, and that's solid advice, and you see it happens all the time. Even when I've personally bought properties, you have a budget in mind, then it's like, well, I can push it a little bit, or I can
an extra $100.
Exactly, it'll be fine. No, so I think that's really good, and that's really relevant advice. Do independent contractors have it off net, or is that gross?
Independent contractors they're based off of what their taxes are.
Okay.
If I'm understanding you correctly.
Yes. Yeah, that was my question.
So we would calculate that out based off of what their, if they've been in business for 5 years, we only have to use potentially 1 year of tax returns. Anything less, we might have to use 2. Again, that's dependent on the program that we go with. There's investor products out there. I could go down that rabbit hole, but there's just a lot of different things out there. But typically with independent contractors, it's safe to start with 2 years.
Okay. All right. Well, that was solid advice. Thank you for coming out here to be on the first episode of my currently unnamed podcast.
I am happy to be here, especially happy with you. Thank you for having me.
Yeah, thanks for coming. If you think of any podcast names, let me know.
The Bermuda Triangle.
Yeah, that's good.
Welcome to the Bermuda Triangle.
Be like, what's your podcast called? Oh, the Bermuda Triangle. Be like, oh, what's it about? Like mysterious disappearances or something? Like, no, it's real estate and
Yeah.
Yeah.
Lending.
Yeah, lending and entrepreneurship. Yeah, obviously, what else would it be about? Those will be my triangles of it, right? It'll be the Bermuda Triangle podcast. Be like real estate, lending, and just guest speakers. Those are my my triangles.
Perfect.
All right, thank you so much.
You bet.